Today, we're talking about investing in 100-bagger stocks. The reason top investors like Rakesh Jhunjhunwala achieve billions of dollars in wealth is that they get their hands on a few hundred baggers or even thousand baggers in life. But here's the thing, I'm not gonna give you an analysis of top 20 stocks that have or can become 100 baggers because that's not what you need. What you need is to understand the path these 100 baggers follow and then how to use this path to find 100 baggers yourself. So, in this video, I'm going to break it all down with a step-by-step process to find multi-baggers. By the way, I'm Deepak Khatwani. I have spent a decade in stock markets studying multi-bagger stocks and invested in some of them myself. Those investments have helped me get financially free in just 10 years of small cap investing. Let's dive in. Let's start with the easiest thing I did in my quest to learning to find multi-baggers. I read this book called 100 to 1 from Stock Market by Thomas Phelps. But I didn't find all the answers in there. I found the book inspirational for two reasons. First, it makes it clear that there are two paths to get rich, which I fully agree with. Either you start a business or be an avid saver and direct stock investor. 9 to 5 jobs will not make you rich. Second, it tells you stories of several non Wall Street common people of how they achieved 100 bagger stocks just by buying right and sitting tight. But there is an annoying amount of focus in the book on sitting tight. And I know from personal experience that sitting tight alone will not make you rich or will not give you 100 baggers in direct stock investing. Let me tell you my story. My dad invested in some shares back in 1992. He held them through until he passed away in 1994. I was 7 then, and nobody in the house knew what to do with those pieces of paper, so they kept lying around. 2 decades passed, I finished school and left home to work in Delhi. When I entered stock market, my mom told me about those shares. I thought, being a long-term investor by chance, here is my opportunity to be a millionaire. I came back home for Diwali. With dollar signs in my eyes, I rushed to the Almira to take those share certificates out. I was already a millionaire in my mind, thinking it would be a Wipro or an Infosys. It didn't take long for the reality to strike. My dad bought shares of three companies. Two were not trading 25 years later, and one was trading for pennies. So, despite sitting tight for 25 plus years, the stock market did not make us any richer. All those sit tight and get rich stories from the book or the real world suffer from survivorship bias. The winners tell their story, and the losers, who far outnumber the winners, are forgotten and not talked about. And that is my problem with this formula. Only sitting tight will not make you rich in individual stocks. It's good for index investing as indices are self-adjusting. They routinely throw non-performers out and take in performers. Retail investors don't do this as they get stuck with losses and never check out non-performers. So the book misses this most important point, how to buy right. And that is why I think this video is all the more important for retail investors as we solve that part of the puzzle in this video. Let's start with a list of stocks that have delivered 100 bagger returns in the past 40 years in India. To do this, we head to screener.in and put this formula: market capitalization above 10,000 crores and price performance over time more than 100x. I'm using the current market cap of over 10,000 crores because I consider 100 crores as a minimum market cap threshold for my investments. So I'm looking for stocks that were at least 100 crore in market cap before they became 100 baggers. The second formula is a custom formula I've built on Screener that filters out companies with 100 times returns. As we run this query, we have about 103 stocks that have become 100 baggers in the last 40 years. I'm adding some that the screener did not pick up because of data constraints. All of them included, we have around 150 stocks. I will put all the work we do in this video in a worksheet for you to download from the link in the description below. Now, 150 stocks is not a big list, but the number tells you something. The odds of you finding a 100 bagger in Indian markets are 5 in 100. I calculated this by dividing the number of 100 baggers by total number of companies with a market cap of over 100 crores, around 3,200 companies. You only have a 5% chance of getting on that 100 bagger. That's a tough find, especially for people who don't devote all their working hours to stock markets. But don't lose heart, there is a way out. Let's analyze this further. There are several stocks in the list that would perfectly fit in the category of what Peter Lynch calls the edge. Lynch proposes that you as a consumer have an edge as you can research and pick stocks of familiar companies and make a fortune. The best idea, as per Lynch, comes from shopping malls or workplace, from the products or services that you already use. I can count up to 45 companies in the list, or close to 30% of these companies that are consumer facing companies that each of us would have come across at some point in life. So we all know Titan, Britannia, TVS Motors, Bajaj Finance because we have all used their products and services. So it shouldn't have been a problem looking up those companies and investing in them to get your 100 bagger. The odds are much better here, that 30% versus 5%. But remember, the list considers data from the last 40 years. If I take out the list of stocks that have become 100 baggers in the last 10 years, which I do later in this video, there are no such stocks that you could have picked. We will address this problem when we get to it in a couple of minutes. Therefore, if you had the vision and the patience to hold any of these companies for 100 baggers or multi-bagger returns, you are worth an applause. Let me know in the comments below if you are in that camp. But I know 99.9% of retail investors wouldn't have gotten serious returns from any of these stocks. That's the unfortunate reality, and I want to change that with my systematic approach. Let's now understand why the invest what you are familiar with approach doesn't work now. So, when the companies in the list were getting listed, the means to raise money for expansion were limited. The biggest source of capital used to be capital markets. Therefore, all companies, regardless of their size, used to tap the market for capital. But this is not the case anymore. Now, most consumer facing companies that we could invest in raise money in private markets, inflate their valuation to insane levels, and come to the market to unload super expensive merchandise on retail investors. Take Zomato for example, its market cap at the time of IPO was 60,000 crores and on the day of listing it was 90,000 crores. It is unimaginable to make 100 baggers on this market cap. Similarly, Lenskart is 70,000 crores. Good luck squeezing a 100 bagger out of such mammoth company. These companies have already matured to a large extent. They defy the first rule of 100 bagger investing, which is a small size. So the approach is practically dead. Let's dig a little more into this data. I changed the 10,000 crore market cap filter to 500 crores and added another filter of 10-year return at 58%. I have relaxed the market cap filter to just get some data, as there are too few companies that are now over 10,000 crores in market cap and have gone up 100-fold in last 10 years. Now, this 58% return is a CAGR return, and if a stock grows at 58% every year, it goes up 96 times in 10 years. I know 10 years is too little time to expect 100 bagger gains, but the screener doesn't have a 15 or 20-year return filters. It can't be created either. So I have taken whatever is readily available. Here is the list for you to see. None of these companies except one, Tips Industries, was consumer facing, which you could have picked with the edge approach of Peter Thiel. Even Tips was not too apparent, as most times when we listen to a song through online streaming, we don't notice who owns the song. This brings us to the most pressing problem and its solution. How to pick 100 baggers in today's age when no consumer facing company is leaving anything on the table for retail investors. Here is my philosophy on the topic. My aim to generate 100 bagger returns is on a portfolio level, not on individual stock. And that too I need to do in shorter time frame because a 100x portfolio in say 35 years is a mediocre 14% return. I'll not be happy with it if I'm investing my time in formulating strategies and picking stocks like I do. My aim is to get the same outcome in half the time. But I'm not discounting the power of one super multi-bagger in a portfolio. Just to give you some context here are few combinations on how a super multi-bagger impacts portfolio returns in say a 20-year period. Of those, this particular combination takes your portfolio to become a 100 bagger. If one stock of the 10 stock portfolio goes on to become a 1000 bagger, your portfolio grows 100x in 20 years. That's a respectable 26% per annum return. But a 100 bagger leaves you with only 14% per annum returns, which is not so respectable because you would anyway get it through mutual funds. Therefore, there are two ways to get a 100x portfolio. Either you find one stock that goes up 1000 times in your desired time, or this is very important, find a way to clock 50% annual returns at the portfolio level per annum. Here is how to do this. First, I'll give you some context. Most of the stocks that become 100 baggers, 500 baggers, or 1000 baggers make their move in spurts. For example, one of the stocks that became 100 baggers in 10 years is Refex Industries. In its 10-year, 200 bagger move, the first spurt came here in 2015 when it went up from 1.5 rupees to 4 rupees. Then came this spurt in 2018 and 2019 when it went from 2 rupees to 25 rupees. And then came this spurt when it went from 21 rupees to 590 rupees. It is now down to 340, a 200 bagger, but at the top it was close to a 400 bagger. Understanding this spurt based move is really important. You can do staircase compounding in these stocks. That is a term I've coined for my 100 bagger portfolio philosophy. Let me explain how I do it. Suppose I have a 5 lakh rupees capital. I'll allocate that equally in 5 stocks that are showing a catalyst for a spurt in price. I'll discuss this catalyst in just a minute, but let's understand how the compounding math works in this case. So if I invest 1 lakh in each stock or 20% allocation in each stock and one goes up 4 times or delivers 300% return while others don't move, the overall portfolio will be up 60% in the year. Post tax, it will be between 48 to 52%. You do this for 12 years and you'll have a 130 bagger portfolio. Now, before you raise your eyebrows at that 4x stock in a year, let me tell you that if you follow the playbook I'm about to tell you, you can get multiple 4x stocks in a year. Some end up going to a lot more, like tips and Refex that I have picked and profited from in the recent past. Even in bad markets of 2025, I've picked stocks that are up 4 times. To catch these spurts in multiple super multi-baggers, I use a strategy that tracks the most important drivers of these moves. That is the company's earnings. Let's look at the last move in Refex Industries when it went from 21 rupees to 590 rupees, a 28 bagger in a short time. Its EPS or earnings per share went up 4x in this time, and the price multiple or PE went from 6 to 56, a 9x move. Both of these combined led to a massive move in very short time. The same thing happened in tips when EPS grew 65 times from 2019 to 2025 and the stock went up 190 times in the same period. In my experience, all these moves start with one inflection point, and that is 1 quarter of explosive EPS growth, the very first quarter. I define explosive growth as over 70% year over year growth in operating earnings or EBITDA or a 140% year over year growth in EPS. In Refex, this inflection point in the last move came in September 2022 when its EBITDA or operating profits grew by 208% year on year. The price then was 25 rupees. It was 600 rupees just 2 years later. So I was looking for a 4 bagger that year, but I got a 20 bagger at the top in that year using just one inflection point. Having said that, there is one big problem with the approach, the problem of plenty. Let's say I filter stocks using 70% operating profit growth criteria in the current quarterly results, September 2025 quarter. This is the query I use in the screener. You can pause the video for a better grasp of it. When I ran this query on 14th November 2025, there were 150 stocks matching the criteria. That's too big a list to research. If you are by any chance keen on researching all of them, then this isn't a problem for you. But I am a little lazy in that regard. So what do? I filter the list further. Here's the list that I have worked on for the quarter. The red ones are the ones that got eliminated due to further filters. The yellow ones are the ones that pass the fundamental filters but do not pass the technical filters. Just to give you a flair, what is my second filter? I look for breakout quarter along with the 70% year on year growth in operating profits. A breakout quarter is a quarter in which the operating profit is the highest in last 13 quarters. So if we circle back to Refex example, its September 2022 quarter was a bumper quarter with 208% year on year growth in operating earnings. And the operating profit number, which was 38 crore rupees, was the highest in last 13 quarters. And that is one of my most important filters. Both these conditions should be fulfilled in the same quarter for me to pick that stock for further scrutiny. The same condition was met in Refex 4 years ago in December 2018 quarterly results. The price then was 5 rupees. Had you just bought the stock then, you would be sitting pretty on a 70 bagger. It touched a high of 600 in the interim. So it has already touched the 100 bagger mark in just less than 5 years. Let me give you another tip to reduce the number of stocks in the list. While looking for both these conditions, I will also discard stocks that are on the list but have met both these conditions in the previous quarters. So if I'm screening in December 2022 results and Refex again comes in the list, which it actually did, I'll discard it because the same stock met the same conditions in the previous quarter. So if I were not able to pick the stock at the inflection point, I would not chase it. This filter is especially helpful when you are screening using the strategy for the first time. It helps you eliminate stocks that you are a little late in discovering and focus on the ones that were at the inflection point and are fresh. I apply other qualitative and quantitative filters like balance sheet strength, promoter holding, etc. to further shorten the list. Therefore, let me give you a technical filter too. I discard stocks that have an RS rating of less than 80. RS rating or price strength is available for free on marketsmithindia.com. You just have to put the name of the stock and it appears here. There are several other filters I use to bring down the number of names on the list. At the end of the quarter, I'm left with 8 to 10 stocks to pick from. I generally keep investing in them as they come till I have spare cash to invest. Once you are in a multibagger, you must ride it till the time earnings keep improving and the stock continues to behave technically. As I said, you just need one such multibagger every year, and it shouldn't be that tough if you follow the process well. I screened using this same criteria back in May 2025 when the March 2025 results were coming in. This is the list I got, and you can see that one stock, Indochem, is almost 4x already. I entered at 180 rupees and exited at 730, a 300% return in less than 6 months. Another ASM Technologies is up 115%. I've exited the third at 75% gain. The overall portfolio is up 70% already in less than 6 months. And that's the power of one quick multibagger. And as I've shown you, they come every year. As a disclosure, I'm still invested in some of these stocks, and this is not a buy or sell recommendation. It's important to understand that when you find such stocks, you also have to allocate a meaty part of the portfolio. This is really important. So when I had less than 10 lakhs in capital, I was taking just 5 bets, 20% allocation to each bet. As my portfolio grew, I moved to a 7, 10, and now a 12 stock portfolio. If you put a small part, say 1% of your capital in such stocks, even 1,000 bagger wouldn't help you much. So don't be conservative when the opportunity knocks at your door. Just to show you how powerful this system is, I'm putting a list of stocks that went up at least 4 times in each of the last 7 years. These stocks you could have picked with this methodology. You will notice that several of these stocks went up much more than 4 times. I was invested in some of them and have made a fortune from them. They are pretty much responsible for my financial independence. As I said, you just need one such stocks every year, and they come in all sorts of markets. Even small and mid cap mayhem of 2018 and 19, I found stocks that delivered 10 times returns. You just have to stay true to the process. If you want to join my community, where I'm creating a group of investors looking to compound their capital at an accelerated pace using strategies like the one we discussed today, join that community using the link in the description below. You can access the worksheet from the description as well. Please like, share, and subscribe for more content on creating 100 bagger portfolios. It will help this video reach more people who need it. Thanks for watching and stay sharp.